The S&P 500 made an all-time high at 7272.52 on Friday 1st of May. However, it failed to sustain and came down intraday under its own weight. Furthermore, we have seen a trendline failure in the Dow Jones. And this is where the Dow Jones failed, first on 30th of April, then on 1st of May. So there are two consecutive failures at that trend line. On Thursday, 30th of April, the trend line was at 49,750 and the Dow Jones closed below that trend line. And because Dow Jones is the prime index to the US stock market, this is why we are expecting bearishness in the Dow Jones and also in the S&P 500 and Nasdaq. However, this bearishness is not the change of trend because we are expecting a limited fall until and unless it triggers the profit booking, because for now the S&P 500 and the Dow Jones have come into the condition to fall. And this was my final update on Friday. When the Dow Jones is closing in the bearish condition and if the SP 500 closes below its open price, then it will follow the bearishness of the Dow Jones and then all of the indices and the entire stock market will be in a condition to get a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, and then S&P 500 will be in a good condition to trade within the 7,100 range to the very strong support level, which has actually helped the S&P 500 and triggered this heavy bullishness in the S&P 500. And what was that level? That was 712x. So if you notice, on Tuesday and on Wednesday, on both of these days, S&P 500 came down, breached the 712x level, but all closings were above the 7,102x level on Tuesday 28th of April and on Wednesday 29th of April. And this was the first update on Tuesday, and again I've repeated this 712x. Then on Wednesday it was the FOMC day, and again I mentioned that the 712x is the tiebreaker. And on Thursday 30th of April we have seen a good gap up open and the bullish movement, because in the final update on Wednesday I mentioned that if the S&P 500 closes in this particular condition in between these two, in that case on Thursday there will be a gap up open or irrespective of any open and initial or intraday bullish movement. But now, because of this closing on Friday in the S&P 500 and in the Dow Jones trendline failure rejection, two consecutive rejections, things have changed a little. And what will trigger the bullishness? What will trigger the bearishness? What are the critical levels in the bull side, bearish side, and the movement? All of that I'm going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of May 4th. Means from May 4th, which is Monday, to May 8th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in three parts. In the first part, I will cover the technicals, the charts, the candles, the technical indicators, and we will deduce the long-term trend and the short-term trend. Second part is the economic factors. Here I will show you a strange movement in the oil, the Brent oil, and also the expectations from the Feds on the rate cut. And these factors will heavily influence the movement of the stock market, not just the US stock market, but the global stock markets. In the third part, I will discuss the probable movement. Probable movement means what is going to happen immediately from Monday onwards, whether there will be a gap down open or the gap up open. After open, whether it will move up or come down, what are the support and resistance levels, and how the bullish movement or the bearish movement will happen. In this, the probable movement section in the third part of the agenda. So first I'm going to start with the technical part. But guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, now I am going to discuss the first part of this S&P 500 technical analysis. In the first part, I am going to discuss the technicals on the weekly chart and the daily chart. First, I am going to cover the weekly chart. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. Now, let's first analyze the candle. If you notice this, the weekly candle of the S&P 500, then intra-week, not intra-week, but again, gain from the previous closing. Previous closing means for the week of 20th of April, the closing was 716507. And for the recent week of 27th of April, okay, the closing was 7230.11. The net gain is 0.97% or 0.95% only. Okay, intra week it has moved up by 1%. In my previous S&P 500 weekly technical analysis, I mentioned that S&P 500 can move up maximum by or around 1% because of the ATH range, all-time high range. Okay, this time there was a little deviation because S&P 500 has actually breached the ATH range by a few like 0.3 or 0.4 percentage points. This means that the stock market and the indices are now tired. The stock market and the indices are now tired. They are getting tired. So we have seen very heavy bullishness, 1, 2, very heavy bullishness, and the S&P 500 from the bottom to the high of this candle gained 13% in 3 weeks. And then from the closing of this candle, the S&P 500 gained hardly 2% in 2 weeks. This means that through this candle, we are expecting some bullishness on Monday, means an initial or intraday bullishness on Monday. Okay, but again, this bullishness or any bullishness for now will be limited. Only when first it comes down, first the S&P 500 comes down, sustains, and then moves up, then only we can say that there will be bullishness of like 2% or 2.5%. That's it. Okay, not more than that. But for that, S&P 500 will have to come down into the 7,000 range, means 70XX range, below 7,100, in order to create some room in the bull side. Now this is the Dow Jones. If you notice the last weekly candle of the Dow Jones, the gains are very limited. Okay, from here the gains are only 0.6%, 0.5% only. Okay, in the entire 1 week, the net gains. But because the candle is bullish, the closing of the candle is above the open of the previous candle and is above the closing of the previous candle. This means that on Monday there will be an initial or intraday bullishness through the weekly chart of the Dow Jones. Now let's analyze the technical indicators. Through the technicals, S&P 500 is bullish through the Bollinger Bands, moving averages, and the Ichimoku cloud on the weekly chart. And also the S&P 500 is now bullish through the MACD and the stochastic RSI on the weekly chart. And yes, it did not hit the K equal to 100 on the weekly chart through the stochastic RSI. Rather, it was the Nasdaq. Nasdaq has hit the K equal to 100. So overall, as of now, through the weekly chart, there is no saturation, okay, and no overbought condition. Okay, S&P 500 is 100% absolute bullish and indicates the long-term trend is bullish in the S&P 500. Okay, for now there is no saturation, no overbought conditions. This is the chart of the Dow Jones. In case of the Dow Jones, almost the same. Dow Jones is bullish through the moving averages, bullish through the Bollinger Bands, bullish through the Ichimoku cloud on the weekly chart. And the Dow Jones says, okay, this is very interesting. And now finally, the MACD in the Dow Jones is in the bullish condition on the weekly chart. Okay, in the next week, if there comes no good fall, no heavy fall, in that case, there will be more confirmation, more clarity. But technically, the MACD of the Dow Jones is now bullish on the weekly chart. Okay, and the stochastic RSI is also bullish. And in this manner, the Dow Jones is also 100% bullish on the weekly chart, means the long-term trend is bullish. This is the chart of Nasdaq. Okay, everything is same. It is also 100% bullish. But I want to show you the problem. Problem is the stochastic RSI. In the stochastic RSI, the K channel has hit 100. Okay, means saturation in the bull side. Furthermore, Nasdaq is going to hit the bullish side divergence and the bullish side overbought conditions on the weekly chart. And for that to happen, Nasdaq need to move up by 0.01% positive. That's it. And then it will hit all of these, the saturation and the overbought and the heavy divergence. So this means that as of now, all of the indices on the weekly chart are 100% bullish. And this indicates that the long-term trend is still bullish. No change in the long-term trend. Okay. Only problem is through the Nasdaq, because Nasdaq has already hit the saturation, but will be more saturated and will gain more weight, means overbought and heavy divergence, as soon as it moves up just by 1 point. Now let's analyze the daily chart. Daily chart is the short-term picture. What is going to happen in 3 to 4 days, 5 days, 6 days. And because daily charts will show us the short-term picture, this is why daily charts are more important as compared to the weekly chart. So let's move on to the daily chart. So guys, now we are here and this is the daily chart. Daily chart means one candle represents 1 day, not 1 week or 1 hour. One candle means 1 day. Now let's first analyze the candle. But guys, before that, so far if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. Now if you look into this, the last daily candle of the S&P 500 formed on Friday 1st of May. Okay, what is this? This is a bearish hammer. And what does this indicate? This indicates an initial or intraday bearish movement on Monday, and also a gap down open on Monday. Okay, a gap down open. It indicates a gap down open, and or irrespective of anything, an initial or intraday bearish movement on Monday. Okay, this is a chart of the Dow Jones. In case of the Dow Jones, the closing is very near to the low. Closing is very near to the low of the candle. Okay, and it is very similar to, this condition is very similar to the open equal to low or open equal to high. Okay, this indicates heavy pressure at the time of closing of the stock market on Friday. Okay, furthermore, there is a rejection from the trend line, not just one but two, but this rejection is very heavy, because on Thursday the Dow Jones rejected exactly from the trend line point. It failed to breach the trend line point, rejected and closed below the trend line. And this was in this the update on Thursday. Okay, the trend line which was around 49,750, and the maximum Dow Jones can move to is its trend line only. So trend line was 49,750 and Dow Jones moved to 49,753. Okay, but on this day, on Friday, Dow Jones opened above the trend line, and this is the most important thing, that Dow Jones opened above the trend line. Okay, it moved up, failed, and then it failed to sustain at the trend line and closed below the trend line. So all of these are the rejections and the failure. Okay, what does this indicate? This also indicates that on Monday there will be a gap down open, or irrespective of any open and initial or intraday bearish movement on Monday. Now let's analyze the technical indicators in order to get some clear idea, some good idea. Okay, whether there will be a heavy fall, normal fall, or there will be a limited fall and then the bullish recovery and the continuation of the bullish movement. So in terms of the technicals, the S&P 500 is bullish through the moving averages, Ichimoku cloud and the Bollinger Bands on the daily chart. Then the S&P 500 is bullish through the MACD and the stochastic RSI on the daily chart, and is very near to the saturation, divergence and the overbought conditions. Okay, so again, all of this indicates that the S&P 500 on the daily chart is 100% absolute bullish, and but is very near to the saturation, overbought condition and the heavy divergence, right? Now this is the chart of the Dow Jones. Dow Jones is also bullish through the Bollinger Bands, moving averages and the Ichimoku cloud on the daily chart, and the Dow Jones is bullish. It is holding bullish through the MACD, and also recently we have seen that the stochastic RSI has also turned bullish. This means that the Dow Jones is also 100% absolute bullish on the daily chart, even though it looks bearish or the rejections or so, but is still 100% absolute bullish. Okay, means it has the potential and the capacity to contain the fall, to limit the fall and to continue its bullish movement, right? So All of this is clear, but yes, in case of the Dow Jones, the saturation and this is not heavy. Okay, only when there comes a minimum of 2 green candles, there will be, it will hit the saturation and the overbought, otherwise it will not. Okay, now here is one more thing. This is very, very surprising. This is the Nasdaq. Nasdaq is 100% absolute bullish. Okay, just like Dow Jones and the S&P 500. But the problem is the saturation, divergence, and the overbought conditions. Now, what does all of this indicates? That the S&P 500 is 100% bullish on the weekly chart and is also 100% bullish on the daily chart. Exactly the same thing is in the Dow Jones and also in the Nasdaq. So the entire, in this manner, the entire US stock market is 100% absolute bullish on the weekly chart and is 100% absolute bullish on the daily chart. This indicates that the long-term trend and the short-term trend are bullish or are absolute bullish. Okay. Now, what does this indicate, or does this mean that there will be the continuation of the bullishness and it will move up, move up, move up? No, not exactly. Why? First of all, because of the candles themselves that I have shown you. Okay. Secondly, it is the indices are saturated. Okay, heavy divergence and the overbought conditions, especially through the Nasdaq. Okay, then some saturation in the S&P 500. In that, so in this manner, we are first going to see some fall. Now, this fall, okay, you should not think that this fall will be, very heavy. This will change everything. Okay, will change the course. No. Why? Because long-term, short-term trends are absolute bullish. Whatever fall will be there, even if there comes heavy profit booking, then also the trend is not going to change. The trend will remain bullish no matter what. Okay, only when there comes sequential fall continuously for 5 days, Monday, Tuesday, Wednesday, Thursday, Friday, continuously it is coming down. Okay, in that case, the trend will change from bullish to neutral, not bearish, to neutral. Okay, so it will take a lot of time and a lot of fall for that trend to change. Okay, but when that trend will change, its first indication will be through the lower level charts. Whenever this will happen, I will keep you posted through the daily updates which I give every day from Monday through Friday to my Patreon community members. Now, there is one more reason why the S&P 500 and the stock market cannot continue to move up and why it will struggle in the bull side whereas the bearish side is open. So this will be known through the economic factors like oil, bond yield, and the interest rates, expected interest rate, the rate cut, okay, or the rate hike. So the next section is the economic factors. But guys, before I discuss the economic factors, I have this important information to share with you, that this is my S&P 500 knowledge transfer program. And in this program, I teach everything from basics to advanced, means whatever I know, whatever I have learned in last many years, I will share that information with you. Secondly, the name is S&P 500 knowledge transfer program, but whatever you are going to learn here is applicable to any stock, any index, the futures, the commodity, or anything that is traded in the stock market. So here I will teach you how the stock market works. Okay, some hacks here. Secondly, the technical indicators, very, very important technical indicators, the modified values, etc. that I will share with you. The trading strategies, and these trading strategies has been modified. Then the market analysis, how to analyze the stock market. Then the options in detail, from the basics to the advanced, including the options calculations, everything about options. Then the support and resistance levels, price prediction, how to predict the price even before the stock or the index hits that price. Then the trend analysis, how to analyze the trend. Then how to recognize the manipulation in the stock markets and how to convert the manipulation or the traps into the opportunities. Then finally the hacks. These hacks have very high accuracy, and these are the snapshots of the meetings. And these are some important terms and conditions. This is my email address here and here. And also I've shared my email address and the link to this Google spreadsheet in the description of the video and also in the comment section. And also guys, if you want to learn only the hacks, 8 hacks or 4 hacks, in that case, you can visit my Patreon page. This is my Patreon page. This is my Patreon profile. And here you will see this section, name is shop section. And when you open this, the shop section, then you will see these 3 programs. This is 8 hacks, premium hacks with very high accuracy and the modified technical indicators. And this is the 4 stock market hacks. This is all about options, from basics to advanced options calculators, option strategies, everything. So guys, I have given the link to this, the shop section on my Patreon page, in the description of this video and also in the comment section. Now guys, I am going to discuss the second part of the agenda, and here I will discuss the economic factors. In the economic factors, I will cover the oil, the bond yields, and the rate, the interest rates. Okay, first the oil. This is the Brent oil. Okay, now if you notice, the oil hit 120.2 on 29th of April, Wednesday. Okay, this high was more than the high formed on 19th of March and was also more than what was seen on 9th of March 2026. Okay, now this time this was different. Why and how this was different? Because when the oil hit here the high and here the high, okay, and then it came down and it was trading above $100 per barrel, the S&P 500 was trading in the 6,000 range, in the 6,300 and the 6,400 range. But this time when the oil hit 120, okay, more than what it hit in the previous sessions, and this was similar to what we have seen in the year 2022. Then when the oil was 120, the S&P 500 was creating all-time high levels. Okay, it was in the 7,200 range. So there is clearly a disconnect between the stock market and the oil. And recently there came the news that the Spirit Airlines has filed for bankruptcy and it is going to shut down. Okay, and one of the primary factor is the oil. Okay, now why and how the oil? We all know that how the oil impacts everyone, individual and the businesses, okay, and the economies. Because oil is not just the transport, but there are thousands of items which are derived from the oil or depend on the oil directly or indirectly. And as per the economist, even if everything is good and well and the war is over, instead of Hormuz is open and the oil comes down, okay, then also oil will not come down straightforward from $100 to $60 or $65. It will trade and will remain within the $80 range, means above the standard range, and this will remain here for a few more months and will oscillate within the 70 and 80, and this is the best case scenario. However, here I am talking about the stock market. So the problem is that when the oil hit 119, okay, earlier when the war started, then S&P 500 was trading in the 6,400, 6,300. It was coming down, okay. But when the oil hit the high of 2022, okay, breached the high like 120, then the S&P 500 hit the all-time high. The Nasdaq hit the all-time high. The Dow Jones was around its all-time high but has not breached its all-time high. This means that Dow Jones is somewhat, not absolutely, but somewhat considering the movement of the oil. And now, one more important thing is that the oil is now holding, sustaining and closing above the $100 per barrel mark. It is not losing, it is not going down below $100 per barrel. As long as oil is above $100 per barrel, it is a problem. It is a problem for the global economy. Now, the next factor that is influencing or is affecting or will affect the movement of the stock market is the bond yields. Now, this is the 10-year bond yield. You can see that as of now, it is 4.372%. Okay, is holding is more than 4%. Right? So earlier also in the year 2025, 2024, the bond yields, okay, were heavy. But when the stock market came down in April 2025, when the tariffs were announced, we have seen that the yields moved up heavily. Okay, then gradually, okay, yields started to come down and finally lost the 4% and traded in the 3.9% or 3.9. It was 3.94 or 95%. Okay, now why the bond yield is important? See, it is because that if you are holding the bonds, then you know that this is what you are going to get and this is the assured return. Now you can notice that the bond yield is more than 4% and is even it hit almost 4.5%. Okay, so just like the last week, okay, again the same thing. All of these at the same time, the bond yield, oil, and the stock market cannot move up. Either the stock market will have to come down, or the bond and the oil has to come down. For a day, for a few days, this can happen, okay, but not continuously, not for weeks or months. Now, the most important part. This is the expected interest rate. Okay, this is again for the 9th of December. This is the month of May. Okay, since March and April, okay, I am showing you this. So what we have seen that for the FOMC meeting, okay, which will be held on 9th of December 2026, okay, the current target rate is 350-375, okay, 350-375. Now for 9th of December 2026, the market participants, okay, they are still expecting that there is a probability of 77.7% that it will remain as is. Means for the year 2026, there will be no rate cut. Okay, now we have June, July, September, October, and December. We have 5 more meetings in 2026 and 77.7% probability. Now, earlier, this probability has gone down to 74% and then to 72% and has again increased to 77.7%. Okay, so it has not gone down heavily. This is more important. Why? Because now the current Fed chairman, okay, Jerome Powell, he has stepped down and the new Fed chairman is coming. He is assuming the charge. Okay. And the market participants earlier, they were expecting that once the new Fed chairman comes, then he will start the rate cuts. But now based on, okay, all of these economic factors, the war in the Middle East, the oil is holding above $100 per barrel, okay, and inflation is heavy. All of these, the conditions, the market participants are expecting that even when the new Fed chairman is coming, he is also not expected to give any rate cuts. Okay, so there is 77.7% probability for the pause. Yes, the probability for the rate hike has come down. It was earlier 24%, then 16%, and it is now 9.1%. But the probability of the rate cut, just one rate cut, okay, it is like 12.3%. Earlier it was 14% or 16%. It has also come down. Okay, best possible scenario is the rate pause for the entire year, a pause. But yes, the situation can turn worse if there comes an extended period of the oil holding and sustaining above $100 per barrel. In that case, we will see economic crunch, not just to one country, but this will be there globally. But guys, whatever is going to happen or whatever will happen, I will keep you posted. I will keep you updated through these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market, which I give to my Patreon community members every day from Monday through Friday. I give the pre-market analysis 1 or 2 hours before the open of the stock market. Then I give the first update when the first hourly candle forms. Then I give the midday update after 3 hours. Then I give the final update 1 or 2 hours before the closing of the stock market. And in this manner, my Patreon community members are very well aware of the intraday movement and also the movement for the next day and for the week. They know the support and resistance levels, the movement in the bullish bearish side, the tiebreaker, etc. And guys, that's not all, because I also give the opportunities in the premium stocks of the US stock market, top 30, 40 companies, the premium companies, and I gave up to 50 opportunities in these the premium stocks with these the explicit numbers. And guys, that's not all, because I also give the midweek update, and this midweek update is a video technical analysis, and here I discuss all of the numbers, levels, zones, means the expected movement of the S&P 500. So guys, whenever you want to get these daily precise updates and the stock market opportunities and the midweek update video technical analysis, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. And guys, when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will see this button that says membership options. And when you click on this button that says membership options, then you will see these 3 levels, level 1, level 2, and level 3. The level 1 is S&P 500 updates, means you will get the daily updates every day from Monday through Friday, also the midweek update videos. Level 2 is S&P 500 updates and opportunities. You will get all midweek update videos, premium opportunities up to 50, and the daily precise updates every day from Monday through Friday. Level 3 is the premium level. Here you will get all midweek update videos, the daily SP 500 precise updates and movement level zones every day from Monday through Friday, the premium opportunities up to 50, and there will be a 2 hours of Zoom meeting. In this one-on-one Zoom video meeting, I will teach you the strategy with very high accuracy, hack with very high accuracy, premium technical indicator with very high accuracy. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, and also the midweek update, video technical analysis, and the premium opportunities in the top 30-40 companies of the US stock market. So guys, whenever you want to join my Patreon community in order to get all of these, I have given the link in the description of the video and also in the comment section. You can follow that link and you can join my Patreon community. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement. Probable movement means what is expected to happen technically, okay, in the S&P 500, Dow Jones, and in a manner to the entire US stock market. Okay, the movement, the levels, the zones, okay, conditions for the bullish and the bearish movement. So it will be for the week of May 4th, means from May 4th, which is Monday, to May 8th, that will be Friday. So all of that I am going to discuss here. Okay. Now, first thing first, the earning season. The earning season is now over. Okay. Because all of the primes of the Dow Jones and the S&P 500 and the Nasdaq has already reported the earnings. So the regular earnings will be there, but there are these stocks that have limited weightage like 1%, 0.5%, 2%, 1.5%. So these stocks won't be able to influence the movement of the market much. Okay, McDonald, okay, and Disney are the primes are there in the Dow Jones. So they will be, but still there will be very limited influence of these stocks. So in this manner, the earning season is now over. Okay, so unexpected push through the earning season will not be there in the stock market. Okay, yes, if there comes some good and the favorable comments from the president, then definitely stock market will consider these the comments from the president. Okay, there is one problem. Okay, this was actually through the oil. Okay, that the stock market is not following the oil. Stock market is simply avoiding or is neglecting, discarding the movement of the oil. Now this is there. Other than that, only on Friday the non-farm payroll data and the unemployment data will be released. This non-farm payroll data and the unemployment data will influence the movement of the stock market heavily. Okay, but this will be on Friday. Before Friday, the stock market will move as is, as per the technicals, as per the levels, okay, and all of these the factors. Now in terms of the levels and the movement, okay, we'll start with the Dow Jones. What we can see here in the Dow Jones is the dual rejection. Okay, consecutive successive rejections. First on the 30th of April when it hit dot, it hit the trend line on 30th of April. And why I am saying dot? Because when the Dow Jones hit that trend line was around 49,750 and Dow Jones made an intraday high at 49,753 only by 3 points. That is why I'm saying when it hit dot, okay, the trend line and failed. Furthermore, secondly, there was a gap up open above the trend line on Friday. It moved up, failed to sustain and closed below the trend line. And also the closing is very, very near to the low of the candle. So all of this indicates pressure, heavy pressure. Furthermore, in the first part, okay, when I discuss the technicals, okay, I have shown you that how these candles are indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday. This means that on Monday S&P 500 will be in a condition wherein it will come under pressure to defend the 7200, but this pressure will be very heavy, and until and unless there comes some positive news or comments from the president, S&P 500 won't be able to defend the 7200 and will have to lose the 7200. And this is as per the condition, closing condition on Friday, that the S&P 500 will be in a condition to trade within the 7100 range and maximum to the strong support level of 7100 2x. However, we will follow the numbers. Okay, in terms of the numbers, what we know is that 7200 is the psychological mark. Okay, there is a level just below this, the 7200, there is a level. Okay, my calculated level. That level and 7200 is creating a strong support. The level is in the 719x, this range. Okay, this level and the 7200 are creating a strong support zone. Only when the S&P 500 loses the 7200 means either there comes a gap down open and the gap down open is below the 7200. Means if I calculate from here, from last closing, then 0.4% fall, and the S&P 500 will lose the 7200 mark. However, S&P 500 can actually defend the 7200. Why? Again through the Dow Jones. Means if somehow if there comes no gap down open, okay, but even in that case the entire stock market will remain in the condition of initial or intraday bearish movement. Okay, but there is no gap down open, then what will happen? In that case, the Dow Jones will again move up and test the trend line. It will again try to recover the trend line. Okay, it can actually breach and move above the trend line. That's not a problem. Problem is whether it will be able to sustain and give continuous hourly closings above the trend line or not. That is the most important part. Okay, and exactly the same was seen on Friday, when after the first or the second hour we have not seen any hourly closing above the trend line, and then it was clear the situation is going to turn worse. Okay, we will see some more fall and probably a red candle and then more fall on Monday. Okay, 4th of May. So this means that the S&P 5, the Dow Jones can try for the trend line. Okay, but if the all hourly closings are below the trend line, it fails to sustain at the trend line, then that will be the third successive rejection, and we will not wait for the daily closing on Monday. Okay, even the first and the second hourly closings are below the trend line, especially when the Dow Jones has moved up, tested the trend line but failed. First hourly closing below the trend line, moved up, tested the trend line, failed. Okay, and then these hourly closings are below the trend line, then that itself will be more than sufficient, more than enough to trigger the intraday fall. Okay, that is why in this manner the Dow Jones, the S&P 500 can try to defend the 7200 psychological mark. Okay, now if the S&P 500 is actually and is really in the bull trend, let's say, okay, everything is good and well, oil is trading in the $60, okay, although it is trading in the $100 or 110, okay, but let's assume a hypothetical condition that Wall Street is assuming that oil is not 110, it is just 60. Okay, war is over, Strait of Hormuz is open, everything is good and well. Okay, in that case Wall Street is expecting a long-term trend. Okay, all of this is a hypothetical situation that is not real, but still, okay, let's say Wall Street is thinking of a situation like this, then also it will come down similar to what we have seen earlier when S&P 500 moved up, okay, sustained within the 7100 range, then it came down two time in the 7000, it lost the 7100, came down, but did not lose the 7000 psychological mark. Okay, similarly in this case also the S&P 500 can easily lose the 7200 and it will lose the 7200 as early as on Monday, as early as within the first half on Monday. Okay, it is in a very good condition to lose the 7200. Okay, question is that whether it will be able to recover the 7200 or not, even on the hourly or the 4 hourly or the daily basis. Okay, Once it loses, then it will come down and will remain within the 7,100 range. Okay, now here comes another, this the trick. But okay, this is the bearish movement, but first let's cover the bullish side movement. What happens if the S&P 500 is actually able to sustain above the 7,200? Okay, and the Dow Jones is able to clear and sustain above the trend line. See, technically this is not possible. Okay, I repeat, technically this is not possible because now there are two successive rejections from the trend line. Okay, especially this rejection is heavy. Okay, so under this condition there comes the heavy fall. Secondly, there is a bearish hammer. Okay, this again triggers the heavy fall. So technically there are no reasons. Okay, technically the bullish side movement and especially the recovery of the trend line is not supported. Again, this is a technical condition. Recovery or movement or recovery of the trend line is not supported. Okay, but if there comes the comments from the president or some positive news, okay, before the stock market opens on Monday, okay, and then it is pushed up in the bull side, then what will happen? In that case, Dow Jones will be moving to its all-time high, and the all-time highs is around 50,506 of the Dow Jones. Okay, the S&P 500 will be in a condition to move towards 7,300. The next psychological mark, although it will be heavily saturated, heavily overbought, okay, heavy divergence, and it will be much more heavier in the Nasdaq. Okay, all of these conditions will be very, very heavy, but still because of this heavy manipulated push, the index will be able to sustain in this the very heavy, the case when the entire stock market is heavy, that it cannot handle its own weight, then it needs the external push so that it can sustain around some level. Last week we were expecting, I think last week we were expecting the consolidation, but no, consolidation is now not there. Okay, there were chances for the consolidation, but there was the movement, clearly heavy bullish movement. Okay, especially on Thursday when there was gap up open and it moved up and entered into the 7,200. And that gap up open on Thursday was because of the closing condition of the S&P 500 on Wednesday, wherein we were expecting a gap up open or an initial or intraday bullish movement on Thursday. Then that was further supported by the earnings. So this means that in the bull side, S&P 500 is in a condition to move to the 7,300, okay, or even a little into the 7,300. Okay, but for that to happen, the Dow Jones must sustain and close above and move above the trend line. Otherwise, that is not possible in the S&P 500 at all. Okay, and as long as the Dow Jones is trading below the trend line, S&P 500 will remain under pressure, will remain under heavy pressure to lose the 7,200 mark. Now in the 7,200 range, there is the level in the 726x. This is the level. Okay. So when the S&P 500 was moving up, then in the pre-market analysis on Friday, I mentioned that maximum in the best to best case, we are expecting 726x in the S&P 500. Okay, but in the normal case, it won't be able to move up. Okay, unless there comes a heavy push. There was very heavy push. It moved to the 726x, breached the 726x by a very very few point. Okay, and that was less than 0.1%, 0.15%. Okay, and it failed because it was supposed to fail at this level. This level was heavy level. Okay, this means that whenever in the bull side, whenever S&P 500 will try to move up, it will have to struggle to clear the 726x level. And when it gives the closings above the 726x level, okay, 2 consecutive daily closings, then it will be ready for the 7,300 or a little into the 7,300, right? This is the bull side. This is the bull side in the S&P 500 and in the Dow Jones, which is highly conditional. Okay, now comes the most important. This is the bearish side. How the bearish side will work for the S&P 500, Dow Jones, and for the entire US stock market. Okay, but guys, yes, before that, so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 and the Dow Jones and in a manner to the entire US stock market every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now, let's discuss the bearish side. Well, again, the bearish side depends on the 7,200. Okay, S&P 500 will have to lose the 7,200 as per the current technical conditions in the S&P 500 and the Dow Jones. Okay, it is primarily because of the Dow Jones and not through the S&P 500 itself. Because see, S&P 500 has given a bearish hammer. Okay, a hammer. This hammer will give a gap down open or initial or intraday bearish movement on Monday. Okay, but still the S&P 500 can sustain or can defend the 7,200. But because of the heavy pressure, because of the heavy rejections in the Dow Jones, it won't be able to sustain. Okay, the real numbers, the real movement will be known only when the stock market comes into the session. Okay, now historically, whenever such kind of combination is seen, like Dow Jones and the S&P 500, okay, it means a trend line is involved. Okay, bearish hammer is there or the doji candle is there. Okay, along with one or two other factors, or the saturation is there, then this indicates a movement something like this. Okay, immediately the next day, if it is the daily chart, and if this is happening on the weekly chart, then the next week and week we can see that the fall. This means that there are very good chances that if there comes no supportive comments from the president or no positive news, okay, of any kind to the Wall Street, in that case we are going to see good red candles in the S&P 500, in the Nasdaq, and also in the Dow Jones. In the Dow Jones, so that red candle will be normal. Okay, not that heavy, very much heavy. It will be normal. Okay, so this will be heavy in the S&P 500. In the S&P 500, it's a special condition because it is going to defend the 7,200. Once the 7,200 is lost, then what will happen? Then S&P 500 will be coming down to the 712x level. This is very, very heavy level. S&P 500 has not lost this level from 24th of April. 1, 2, 3, 4, 5, 6 continuous closings above the 712x level. But the most important part is the closings above the 712x, 28th of April and 29th of April. And repeatedly I have mentioned the 712x, the 712x, because as long as the S&P 500 is holding above, giving hourly closings above 712x, there will be no fall. Whatever fall will be there, the breach will be there, that will be recoverable, and the S&P 500 will remain bullish. Okay, now problem is that when the S&P 500 comes down from this, the last closing, to the 712x, then it will be losing more than 1%. More than 1 or 1.4%, it will be losing that much. Okay, now here comes the Dow Jones to the rescue. Okay, how the Dow Jones is going to rescue when it is going to create the fall? For that, this is the last closing of the Dow Jones. Now 1%, 1.5%. What is 1.5%? The low, the low of this candle. Okay, what is the low of this candle? 48762. 48762.26. Okay, low of this candle was 48788. 48788.81. But because 48762 is lower than the 48788.81, this means that the low price of this candle, okay, on formed on 30th of April, will be considered. What is so special, okay, in this case? See, this was the candle, okay, in my previous S&P 500 weekly technical analysis I have mentioned. Once the S&P 500, once the Dow Jones breaches this, the open price, okay, or the low price, then it will come under pressure. Okay, and the technicals can change. And exactly the same was happening. The technicals were changing. You can notice the change in the Dow Jones, there was confirmed change in the stochastic RSI, but the Dow Jones, sorry, the change in the MACD of the Dow Jones, the MACD was also changing from bullish to bearish. This change was happening, but then on Thursday 30th of April, very heavy bullish push, almost 2% intraday bullish push, and this was disallowed. This change was disallowed. This is why once there comes such a condition that the Dow Jones is or has come down and is breaching, first of all, Dow Jones will hesitate. What Dow Jones will hesitate? To lose or to breach. I'm saying breach. To lose or to breach the open price or the low price 48,762.26. Okay, first of all, it will clearly hesitate because this is 1.5% from the last closing, and if there comes 1% or 1.2%, 1.1% fall in the Dow Jones, in that case the S&P 500 will be easily, it will be coming down to the 712x level, not a problem. Even it can come down very near to the 7,100 psychological mark, okay, very easily. But now whether the S&P 500 will lose the 712x or the 7,100, it will depend on whether the Dow Jones has actually breached and has lost the low, means the 48,762.26 or not. Okay, now intraday, if there comes a breach, then this means that now the technicals are changing, okay, or are going to change from bullish to neutral, at least if not bearish. Okay, but then we will have to see where the closing is. Why the closing? Okay, for that again the same logic, the same principle, the same everything. Okay, what is that? If you notice, last time also when the Dow Jones breached the low of this candle, okay, this was 48,788, the low was 48,708. Dow Jones lost, means breached the candle, but it retraced back and closed above the low of this candle. Okay, so this means that even though there was a change, the change was supposed to happen in the MACD, but still the Dow Jones was not in a condition to come down and to lose. It was in a condition to defend and again to move up, not heavily, but limited bullish movement, not heavily. Okay, this is why only when there comes a closing, a daily closing, first of all hourly closings to confirm, then finally the daily closing, a daily closing below the 48,762.26 in the Dow Jones, then S&P 500 will be in a condition, okay, not just in a condition, but it will then be losing the 712x and the 7,100. Now it doesn't matter, okay, whether it loses the 7,100 or not, but it matters. What matters is that whether the S&P 500 has lost the 712x or not. Okay, and how we will confirm whether the S&P 500 is coming down to the 712x? Through another level, okay, 717x. There is one more level between these two, okay, that will also act as very strong support zone. But when the 7,200 is lost, then there will be some good strong support at the 717x. Okay, then the intermediate support zone, and then only to the 712x. So 712x level is heavily defended, it is heavily guarded. Okay, because see, if the Dow Jones is hesitating, Dow Jones is showing reluctance to what? Dow Jones is showing reluctance to give a closing below 48,762.26. But somehow the S&P 500 comes under pressure and the S&P 500 starts to give or gives a daily closing below 712x. In that case, Dow Jones will be forced, it will be compelled to lose and to close below 48,762.26 either on the same day or the next day, no matter what. Okay, this is how these two indices are interlinked, are interconnected. Okay, now again, see, if the S&P 500 is holding, there will be no change in the trend, because as long as the S&P 500 is holding within the 7,100 or above the 712x level, okay, it will remain in a condition to move up and to go bullish, right? However, situation will change when it loses the 712x, because in that case there will be heavy pressure on the 7,100. then it loses the 7100, then comes the heavy pressure on the 7000 psychological mark. Very heavy pressure. Okay, in that case S&P 500 will have to come down to the 7000. But again, before it can come down to the 7000, a lot has to happen, because losing from here to the 7000 means like how much? It is like 3%, almost 3% loss. Okay, well, S&P 500 can lose up to 4% or up to 5% within one day. Historically, it has given such kind of movement. But for this to happen, there must come us very, very bad news, okay, or something worse, you can say. Otherwise, not 4 to 5%. Otherwise, intraday 2 or 2.5%, okay, bearish movement. But here the thing is that once it starts to trade below 712x, daily closings are below 712x, then automatically the pressure will grow on the 7000 to defend itself. Okay, and in that case, because S&P 500 has so far, it has not come down to the 7000. The low on 23rd of April was 7046. This was the low, 7046.55 or 55. It was 55. Okay, low on 23rd of April, and since then, okay, it has just moved up, but it has not come down near to the 7000 psychological mark. Okay, but whenever it loses the 712x daily closings below, then it will be pushed further, then there will be more selling. Okay, and profit booking. Yes, profit booking. Profit booking will start when the S&P 500 loses the 7200 and the closings are below 7200. The profit booking will start. This includes the hourly closings also. Okay, profit booking will remain normal as long as the S&P 500 is holding and closing above the 712x level. Once the S&P 500 loses the 712x level, then profit booking will accelerate. Why? Because in that case, it will be coming down in the 7000 range. Okay, not to the 7000 directly, but in the 7000 range. There are strong levels, strong support zones in the 7000 range. And these strong levels and support zones have proved themselves on 21st of April and 23rd of April. Okay, we knew that when it comes down to this, the strong support zone and the level, then it will bounce back. It will hold and it will bounce back. That is why S&P 500 will have to clear, okay, these are the boundaries. Now in the 7000 range, when the S&P 500 comes down, okay, then it will have to clear the low of this candle. Low is 7046.55. 7046.55. This is the low of the candle. Okay, it will have to clear and to give a daily closing below. First, it will have to give hourly closings below, then to give daily closings below the 7046.55. Then there is my level in the 703x. That level will again defend. It will not let the S&P 500 come down to the 7000 directly. Okay, then again in between 703x and the 7000 there is a very small but strong support zone. So 7000 is strongly defended, is strongly guarded. Okay, but the first indication that the S&P 500 can actually reach to the 7000 and can lose the 7000 is the 7046.55. Okay, once it is gone, then 7000. Okay, and if there comes heavy pressure, heavy fall, heavy selling in the next week, and whenever the S&P 500 loses the 7000, then it can dip to the 6800. But now everything will be very, very much clear on Monday, whether there will be the bullish movement, bearish movement, okay, where the open is, or the initial profit booking, okay, is there, or if the manipulation will continue to hold or to support. Okay, because the stock market is now very heavy, that it is not in a condition to hold its own weight, even though it is long term, short term bullish, but it is not in a condition to hold its own weight. That is why it needs the external help, okay, some manipulation. Okay, so it will be very, very much clear on Monday. So in my pre-market analysis on Monday, okay, it will be very much clear whether we are going to see a fall or the continuation of the bullish movement with limited fall. Okay, or what are the chances for that it will lose, okay, and it will come down to the 712x intraday. All of that in the pre-market analysis, and then when the first hourly candle forms, then it will be much more clear. So if you have not yet joined my Patreon community, then in order to get, these are daily updates, you can join my Patreon community. Okay, and then in the pre-market analysis, okay, I will tell you what we are expecting to happen in the S&P 500. Okay, and guys, other than that, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. And if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And guys, if you have any questions that you want to ask, or if you have any questions related to my programs, okay, or the movement of the market, or anything like that, then please feel free to ask your questions through the comment section of this video.